All right, guys, I hope everyone had a great weekend. It's the Optionfinity weekly strategy session for October 18th. Usual disclaimer, everything we discuss is for informational purposes only. Do your own research and obviously take everything I say with a grain of salt. The week ahead, economic data, we have not a ton. Tomorrow, we have the NAHB Home Builders Index. Tuesday, housing starts and building permits. Wednesday will be the beige book at 2 p.m. So keep an eye on that. Thursday, jobless claims as usual, and existing home sales, index of leading economic indicators. And then Friday, we have the market manufacturing PMI, flash, and the services PMI as well. So keep an eye on the Wednesday numbers at 2 p.m. That should cause a little bit of volatility. Obviously, now we have 16 days to go until the election. So we're only 2 weeks and change away from that. As of now, in the polls, Biden is leading by a wide margin. So unless Trump makes up a lot of lost ground, it seems like Biden will win the election. And right now, Wall Street seems to be okay with that, given the way the markets are reacting. So I don't expect a ton of movement into the election until we have the actual definitive decision. But keep in mind, again, that there's a high probability that the decision will be disputed by Trump if he loses, right? And that can cause some civil unrest, right? So I'm positioned pretty neutrally into the election overall, heavy on cash, a few long positions that I don't mind owning longer term. Obviously, some covered calls on my existing positions and some leaps on a few names that I don't mind owning longer term as well. But don't go gambling on short-term fluctuations, because the volatility is priced very, very rich right now. And if you're buying short-term options, your probability of profit is not very high, right? You might get a directional move, but it has to move a lot in your favor in order for you to win, right? So think in probabilities and make wise decisions and treat your trading account as if you're running a business, right? Like don't gamble your hard-earned money on trades that may or may not pan out. Last week I saw one guy bet $10,000 on a binary event on FSLY, Fastly, and it happened to pay him out about 700 grand or so. So he got paid on that play, but it was a very binary event. He was risking $10,000 on the stock price moving $7 to the downside within 2 days. Fortunately for him, he had some negative news on the company and it plummeted, but that's a rare occurrence, right? Making those kind of bets is not a way to conducively or conducive to profitability in the long run, right? So just keep that in mind, right? Treat your account as a business and make wise actions with your trades, right? Think in probabilities. Don't think in terms of hitting home runs and getting rich fast, because it doesn't work that way, right? You want to treat trading as a byproduct of your excellence, right? And money is a byproduct of excellence, not a goal overall, right? The overriding objective is constant improvement, right? So you want to be bettering your knowledge every week, reading more, learning more about a certain industry or a company, adding more information to your arsenal to make better decisions, right? That's what it's about. So make sure you make wise decisions, okay? That's my mini little rant right there, tangent, if you will. The iPhone Pro sales for Apple started off pretty strong last week, and I expect some margin expansion given that they announced they won't be including the chargers in the phone cases, right? So that's going to be, in my opinion, a huge driver of expansion, because now they're not paying to have the adapter in their case, right? With the iPhone, which is a huge cost savings for them, and they justified it by saying it's to be environmentally friendly, which in my opinion is BS, because they're going to be shipping those devices separately, right? Like people are buying the wireless chargers and whatnot, but they are expensive accessories, right? The wireless charging ring is like $55, and if you want to buy an adapter, it's like $30 or something like that. So there are a lot of ancillary costs that are going to be associated with buying a new iPhone if you don't already have the existing adapters. But the point here is that additionally is that the iPhone Pro is now shipping out into mid-November already, right? This is not the Pro Max, this is just the Pro itself, right? So given this information, it's probable that the first batch is sold out or close to sold out, and the blue phone is obviously the highest seller right now. The iPhone 12 on its own, the non-pro models, you can buy them pretty much on Friday when they're released. But iPhone did use a pretty smart strategy in staggering their releases of the different model sizes. You know, the mini, the Pro Max, and whatnot, because they can gauge the demand for each incremental item, right? And also each color too, right? So I think this bodes pretty well for Apple. Smart decision on their part to not ship the power adapter with the phone, because it means that a lot of people are going to be buying a new power adapter, right? And obviously, you know, to say that they're being environmentally friendly, well, that remains to be seen, I guess, right? Next up is, for this week, a big milestone for Virgin Galactic, which will be occurring on Thursday, I believe. It actually opens up their window for one of their last two test flights. So they're going to test, I think, do one test flight with just 2 pilots, and then a second flight with 4 people in the actual cabin, right? Before they launch Richard Branson into space early next year. So I know a lot of you guys are trading Virgin Galactic right now speculatively. I'm actually in leaps on it as well, long term. And, you know, I'm confident in the company, given that they have a pretty solid management team. But obviously, it's still very speculative, right? If, God forbid, they have a failure of a launch, then that would be devastating for the company. If they have a good launch, a successful launch, obviously, you see an abrupt pop toward $30 a share, maybe even higher, right? So yeah, keep an eye on that. Starting on Thursday will be their launch window. I would not play the Friday expirations if you're trading short term on it, on that thesis, just because there's no guarantee they'll launch prior to Friday's expiration, right, which is the 23rd. So keep an eye on SPCE. We'll discuss it a bit more after if you guys want. Earnings for the week ahead. We're now kicking off heavy into earnings season. Tomorrow we have Halliburton prior to open. We have Logitech, IBM. That's pretty much it for tomorrow. Tuesday, Procter & Gamble, Lockheed Martin. What else? We got their Travelers Insurance. After close, heavy hitters, Netflix, Snap, Texas Instruments, iRobot, Teradyne, Interactive Brokers as well, which is my favorite brokerage. Not sponsored, by the way. Wednesday, we have Abbott Labs, Verizon, Winnebago, Biogen prior to open. After close, Tesla. That's going to be an interesting move on Tesla. We'll analyze that in the EM and PM sheet in a sec. Chipotle, Xilinx. Keep in mind, Xilinx will have an effect on SMH ETF in all probability, right? So it'll probably move the semis a little bit. So keep an eye on SMH as well, as a byproduct of XLNX's report. Thursday before open, Coca-Cola, AT&T, American Airlines, Southwest Airlines. And then after close, you have Intel, again, which would hit semis as well if they have a bad report, or a positive report. Obviously, it'll cause a pump up. Sam Adams, Capital One, Mattel. And then Friday, you have Amex, and that's pretty much it on Friday, right? So busy week overall. You want to obviously be positioned appropriately if you're trading a competitor to a given company that's reporting. For example, if Coca-Cola is reporting and you're holding Pepsi stock or Pepsi options, you want to be aware of that report, right? And analyze the EMs and PMs. So keep those in mind. Last week, here's the analysis overall. There were some large moves to the upside that breached, but they fell back below. So we had that big move on Monday to the upside. The overall analysis is right over here. So thank you very much to Frankie as well, Frankie Shirts. Great job. 3 out of 35 tickers closed outside their range: Google, Royal Caribbean, and Zoom. 11 out of 35 breached temporarily, but closed within the range as well. It's Apple, Amazon, Salesforce, Facebook, Johnson & Johnson, Microsoft, Netflix, PayPal, NASDAQ ETF, Spotify, and Tesla. And we had 14 out of 35 closed within a 1% range from last week's closing price. So Very choppy, a lot of premium burn there. 19 out of 35 closed green and 16 out of 35 closed red. So almost 50-50 in terms of closing green and closing red. Zoom was the largest gain on the week at plus 13.6%. And Royal Caribbean was the largest decline on the week at minus 17.2%. So again, a lot more chop this week. A lot of premiums are jacked up because of earnings and the election. So if you do get any chop at all and you're going long on short-term expiration contracts, you're going to get burned pretty hard, right? That's why you got to use spreads to offset your risk if the IV is very high, which is right now, right? Ticker analysis for the week ahead. So we have AAL's earning report. To the left side, you can see the bolded names are the ones that are reporting this week. So AAL has a PM of $1.14 in one direction, or 9.10%. Upper move is 1360, lower move is 1132. Intel has a PM of 428, or 8%. Upside 5844, downside 4988. Love has a PM of $2.78, 7%, upside 42.45, downside 36.89. And I expect airlines will do poorly, obviously, because no one's traveling right now, and we're seeing lockdowns reinstated, globally right now. So just in Canada, obviously, which is where I am, we saw lockdowns reinstated this past week, and it's not really that much fun because there's not much to do, right? So spend your time studying and reading and learning, and be productive in the time where you're forced to stay, in your house, right, indoors, right? Use your time wisely, obviously. Netflix reports as well. The PM is 6806, or 12.8%. Upper move is 598.64. Lower move is 462.52. Keep in mind that their expenses should probably drop this quarter because production's been on hold for a lot of their shows. So that'll be interesting to watch their cash flow in their report. Snapchat's ER as well. So they have a PM of $4.41, or 15.9%. That's the upside of 32.24, which I believe would be an all-time high, and downside of 23.42. Then we have Tesla as well, with a PM of 60.48, or 13.7%. Upside is 500 and change, and downside is 379.43. That might make an interesting Iron Condor if you go way out of the money on that, because I feel like Tesla is going to be one of those ones where people are expecting a large move and it might not move too much, might have a choppy move. Either way, use this information as you will, and manage your risk well. Use spreads if you're going to be trading to the upside or downside on EMs and PMs, and make sure your deltas on your long contracts are adequate to generate profit. If you're going out of the money, again, the far out of the money contracts are pretty much a tax on people that can't do math, right? That's all they are, right? Sure, someone will win, just like the lottery, but reality of it is most people will lose. So keep that in mind, right? That's basically it for the week. Any questions at all before we go over Virgin Galactic's chart and EMs and PMs like that? Actually, I wanted to go over that right now too. So Virgin Galactic has a PM for the week of 276, or 12.3%. So upside would be 25.22, and downside would be 1970 overall. And that would coincide with their launch, obviously. If they launch Thursday or Friday, which is when the window starts on Thursday, and they have a successful launch, you're going to see them probably have an upside move, I would imagine, to 25 to 30 in pretty short order, right? This stock can move very, very fast, and make sure that you're trading it carefully, obviously, right? Because it is very volatile. So any questions, guys?
Nope.
Not at all? All right. Well, if you guys have no questions, then I guess we'll cut it short today. Anyone at all? Anything you guys want to review at all? Any charts you want to look at? Okay. YOLO operator asked, if this small $500 billion stimulus is passed, how long do you think it'll give the market a placebo effect? I don't think this will be conducive to anything in the market, given that it is far less than anyone has wanted. So if anything, it might have a negative effect on the market. But right now, as I speak, we can look at the futures and see that they are they're green right now, right? So one second, I change my screen. 1 second. So right now, the NASDAQ is up 0.7%, NQ, ES is up 0.5%, and the Russell Mini is up 0.53%. So you're seeing a large move likely on this information, but I don't think it'll have a lasting effect. And I do agree that it's going to be a very ephemeral move, right? So I wouldn't count on it to sustain us the upside. But that being said, again, given that Wall Street seems to be warming up to the fact that Biden is probably going to win the election, I'm more confident to say staying on the long side. The only concern I have is really what happens if Trump loses and starts to cause some trouble, right? That's the only real worry that I have going into the end of the year, because ultimately right now the liquidity in the markets is very high, and you're whenever we do get that stimulus passed, whether it be 1 trillion or 2 trillion or 4 trillion. I mean, at this point, they're just throwing money at everything right now, right? I don't think it's going to solve anything longer term. It's a pacificity move, right? But again, it'll cause upside and inflation in non-conventional assets, right? So you can see inflation in the stock market, in real estate, in certain assets, like even in crypto, for example, right? I've been I haven't been really too warm on crypto, but as I read more and more about it and see what's going on in the world, perhaps it has some validity, for a small percentage of your portfolio, like a 5% allocation speculatively, right? Because if you're right in that respect and you win, it might end up being a big payday, right? But again, you want to be careful with what you're doing and how you're positioned into the election. If you do get some noise that Trump might win all of a sudden, kind of like the 2016 election where everyone thought, Clinton was going to win and then, she lost. I mean, anything can happen, right? So just position yourself carefully. And if you're buying stock, if you're buying leaps, you don't need to be as concerned. If you're buying short-term positions with the intention of making money on a large downside move, for example, or a large upside move in the short term, given the volatility premiums, you're probably better off either using spreads at the money or waiting until the actual event is passed to make your decisions, right? Because again, if you're going to make your decisions after the election, and let's say we pull back and you're all cash, you're in a great position to buy assets that are premium assets that are on sale, right? It might be an early Black Friday for the market, right? Who knows? And that's kind of how I'm positioning myself, right? Like I'm not concerned about missing out on the upside, because I am positioned in a few longer term positions, like CRISPR, for example, and Virgin Galactic. But I also don't want to get burned if we do get a large downside move, right? So I'm not buying insurance, but I'm also not going heavy in the long side in the short term, right? There are a few more questions, I think, over here. 1 sec. So we had Joel said also the possibility if we don't get a declared winner for a few days because mail-in ballots could take longer to count. Yep, that's correct, right? So that's why I mentioned a few weeks ago, if you're going to be playing the election, you don't want to go the same week of the election. You want to go perhaps maybe a month after, right? So late November, even December monthlies, for example, if you're doing that. Good point, Joel. Oliver said, would you be surprised if we crash after elections? I would be surprised, given that the market seems to be pretty resilient right now. It doesn't matter what news we're throwing at it; it's holding up pretty well, right? And again, you have the heavy tech stocks, Facebook, Apple, Amazon, Google, so on and so forth, that are holding the market up, right? The rest of them don't really matter too much. Unfortunately, we're a very top heavy weighted market right now, right? There's a graphic one of my friends sent me, actually. I got to find it, but it said basically that the top, where is it? Let me find it 1 sec. 1 second, sorry, bear with me, guys. It said that the top 10 companies in the S&P are up 9.6% year to date. The following top 50 companies are up 2.4%. And then after that, it gets pretty ugly. So you have the next 50 down, 5.7%, the next 50 down 1.9%, so on and so forth. Cumulatively, on a equal weighted basis, the portfolio should be down about 14.1% on S&P, right? But it's positive on the year because of those top 10 companies. So keep that in mind right now. And again, you have a lot of like pricing power with, Facebook and Google, for example. Like for them, they could just change their pricing model, on a whim, raise their prices, and to them that's inflation fighting, right? If they see inflation kicking in, they can just raise prices, right? Apple's already doing that, in essence, with not including the power adapter. That's in essence a inflationary move. Under the guise of being environmentally friendly, they're essentially just taxing the consumer, having them pay for the iPhone, still paying a premium, but having to buy a second adapter if they want to buy the adapter, right? Or the power adapter, right? So keep that in mind, right? Joel said, I would not be surprised with the crash, but I would be equally not surprised with no movement or with a pump. Yep, I totally agree, Joel. I think we're going to have chop, but it might have some whipsaw to the downside, then upside again, but I don't think it'll be very sustained, right? Jason asks, does space have any significant competition at the moment? Right now, it would be Blue Origin and SpaceX, right? So I think I read that SpaceX will be taking Tom Cruise into space next year sometime. So they will have competition for sure in the long run, but given that there are so few companies that are in this market and the market is pretty large, there really isn't that much competition, especially competition that you can invest in right now in the public markets, right? So hopefully that helps. Obviously, CRISPR on Friday had a huge move. Actually, I was going to say one thing too before I cut off. I was going to pop into my Chrome and show you guys a few things I was looking at. One second. So here, where's my? I zoom went away. It's like, sorry guys. So I want to mention Peloton, right? So Peloton is kind of crazy, right? If you look at the chart, maybe this is the worst chart to look at. I'll pull up the actual one on Interactive Brokers. One sec. Here's the actual chart over here, right? So you can see it's had a massive run in the last month or so, right? If you go back to August 26th, it's run essentially up at the high 118% in about a month or about 2 months now, I guess, right? That's a massive movement. And looking at the valuation on this company it's kind of stupid, actually. They're worth, $40 billion with sales of 1.83 billion, trading with negative income right now, right? So they're actually losing about 71 million a year, and their forward P is 321. So this kind of run right here, I think it will stop eventually, and I think it's one of those stocks that will be in hindsight, looking back on, you might see that it was a great short opportunity. Somewhere around 140. I actually shorted on a Friday on 0 days, which I don't recommend people doing, and I had a nice trade there. But I do think that it'll fall back down to somewhere around the maybe 70 to 90 range in the next few months. And then also ZM is actually absurd. Look at their chart, right? So to me, ZM is by far the most overvalued corporation in the market. Just to give you guys an example of how overvalued they are, right? So current market cap, $152 billion. Their overall profit right now, $230 million, right? So they're worth 152 billion, but they're making about 230 million in profit, right? On sales of 1.35 billion. And keep in mind that even with COVID, this boom in their revenues and their profits, that's nowhere near where they have to be worth, $150 billion, right? Their current P's, 714, forward P's 192, price of sales is 114. That is just absurd, right? If you compare companies that they're worth more than right now, if you go to a screener, for example, and go to valuation, market cap, go to large cap, and you rank them out, you can see that Zoom is worth more than like UPS, for example. They're worth more than ExxonMobil, Qualcomm, Medtronic. They're worth more than Chevron, Eli Lilly, Texas Instruments. Like you can just see like some of these massive names that have, that are way more profitable than them and have, far better businesses than them are trading at a lower valuation lower market cap overall, right? So again, there are going to be some great shorts in the market. Whether or not you can time them or not is another question. Shorting is a matter of timing. If you catch that top, you're golden. If you're not catching the top, you're probably going to get burned. But I think that these are going to come down in the next few months because I don't see why people would be holding these long term in their portfolios given the valuations, right? There's heavy risk to those names. Oliver asks, what EV stocks am I looking at besides Tesla? I don't personally look at EV stocks too much. I don't like getting caught up in the hype space. I avoided wheat stocks. I avoided crypto. I avoided solar stocks back in 2008 to 2012 timeframe. I try to find undervalued corporations and invest in them before everyone else is discussing them, right? Kind of like CRISPR when it was at $80 or so, and now it's at 110 or so, right? So that's already been about a 43% gain already on that stock alone. That's a way to make money, right? Long term, the market is finding undervalued assets that you believe in before other people find them, right? That's all it is, and just being patient enough to ride out the waves, right? So if you're buying leaps, again, if you're buying 1 year, 2 years out, you can ride the waves, no problem, right? If you're buying short term contracts, you need to be very correct very fast, otherwise you're going to lose your entire bankroll, right? That's why trading short term contracts is super binary. Selling premium in the short term, especially if you're doing calendar spreads or if you're doing poor man's covered calls, that's a phenomenal strategy because the rate of return on that is enormous. The risk is relatively low, assuming that you're managing your risk position wise, and your probability of profit is very high, right? And so using smart strategies, when they're appropriate, is really the key to making your money grow longer term. And remember, wealth is built, in the long run. It's not built overnight, right? It takes you a long time. You got to build up your knowledge base, understand what you're investing in, understand why you're doing what you're doing, understand your mistakes, right? Learn from your mistakes as well, right? Being introspective is very important in trading, and a lot of people aren't introspective because they have no idea where they're going wrong, right? So I have a lot of good conversations with my students, and we discuss their ideas and their trades in hindsight, and that's kind of where we improve their thinking along the lines, right? So again, if you want to improve, you have to do a lot of reading and research, but also understand where you're going wrong, which is why you need to journal your trades, track your metrics, and understand where am I going wrong, where am I going right, what should I cut out, what should I do more of, right? That's all it is, right? And again, treat it like a job, treat it like a business, right? Don't treat it like roll out of bed at 9:28, open your phone, put a trade in at 9:31, hope you make $500, whatever, or lose $500. That's not how you're gonna make money in the long run, right? Treat it like a business. Wake up early, do your research before a market open, do some meditation, whatever your routine is in the morning, right? If you're trading prior to market open, if you're working full time, don't trade day trade, right? Trade longer term. Do per month's covered calls. Do cash secured puts, right? Do calendar spreads, right? That's the way you're gonna make money. So hopefully that helps, guys. Oliver asked, lastly, this is the last question I'll answer, I guess, because I don't want this video to be too long. What EV stocks are you looking at besides Tesla? Could you show us an example of a per month's call? Yeah, sure, of course. One sec. So let's say we did a per man's covered call on, I don't know, let's find a name. Let's say we did a per man's covered call on, well, you can do it on whatever you want to do it on. Typically, you want to have higher liquidity. But let's say, for example, Wynn, right? One of my students is actually trading Wynn right now. I believe he bought the April, or was it March? I think it was a $70 contract, if I'm not mistaken. So he bought this, and he was selling, I think, last week, the 75 call, which was too low for his break-even price. But you want to go above your break-even price. So, for example, if you go to the November 20th expiration, you go to the 80 strike, or sorry, 85 strike over here, right? So here, if you bought the 70 strike for March of next year, and again, this isn't really a leap in the true sense because you usually want to buy at least a year out, right? Again, leap sense for long-term equity anticipation security. So your break-even price would be whatever you paid for your long-term contract. So let's actually break this down into a trade that I would do instead, right? I think Wynn is undervalued right now because after coronavirus passes over, which may be in the next year or so, might be in 2 years, but either way, I think we'll go back to around 140 a share eventually. So double the current price. You buy the January, perhaps 2021, or sorry, 2022 contracts, right? And I would go for the, 0.6 delta. I mean, sorry, a 0.7 delta, which is around the 60 strike over here. So I'm going to get this contract. And again, the slippage here isn't that bad because the bid is 24.40. The ask is 27.75, right? So the spread isn't that wide. There's very low open interest, however. So you got to be concerned longer term if there will be, a widening of the bid ask spread. But for now, given that you're buying it and holding it longer term, you don't really care about that. If you can get in close to the ask, you're fine. Let's say you get in for 24.50, for example, or 24.60, right? So your break even would then be 60 plus 24.60. So your break even would be 84.60, right? You go down to the November monthly contracts, you sell above your break even strike. So you need to sell the 85 strike, right? For November. So you sell that for around $1.80. So if you pull in $1.80 on risk of 24.60, you're making 7.3% return in about a month, which is a phenomenal rate of return, right? It's not sexy at all, but it's a phenomenal rate of return. For most people, they're happy with that. If it breaks above 85 by expiration, perfect. Your leap will increase a lot more than your short-term contract, assuming it doesn't burst above it and go to like 100, for example. However, if it does, because it's your short strike is above your break-even price, you're going to make a profit on that trade no matter what, right? And make an additional like $1 or so. So you make basically 280 on risk of 24.60. You'll make about 11.4% in like 30 days or so, right? Again, solid return. Let's say it expires worthless. Now your cost basis on your long-term contract has gone down from 24.60. You subtract from that your premium you pulled in on the monthly expiration. So you pull in about $1.80. Now your break-even price is $22.80, right? On the contract, which means your break-even price overall is your strike price of 60 plus your premium now of 22.80. Thus, it's 82.80, right? That's your break-even price. So you keep selling above your break-even price every month, essentially, right? And you have basically until January 2022. So you have about like 13 months to sell against it, right? If you can pull in $1.80 on average every month, factoring in that you're going to get a lot of premium on the months when they have earnings reports, right? You can easily break the premium down. And if you're riding it up, like if you're selling out of the money as it moves higher and higher each month, for example, let's say it goes to $83 by November 20th, and the 85 strike expires worthless, right? Then you sell a 90 or 95 strike for December expiration, right? Then by December, perhaps goes to $90, for example, right? You keep pulling in premium, but you're selling out of the money, right? Not trying to be assigned. If you're caught, however, you're still making a profit because you're selling out of the money, right? So that's where you make good money on poor man's covered calls, right? If you're trading, cheaper stocks, obviously, that have lower volatility, you're going to pay less premium and also generate less return as well, right? So hopefully that helps Ernesto or Oliver, right? Guys, any more questions before I go? All right, guys, awesome. Well, I appreciate your time, and hopefully you have a great week. I'll be in voice chat tomorrow for anyone that's in the Opportunity server. And yeah, if you guys enjoy this video, just hit the like button and toss a comment in there. I appreciate that. Obviously, share it with your friends. You find that they'll find value in it as well. Thanks a lot, guys. Have a great night and take care.
Thank you, Nick.
Thank you.